AI investing, how to ride the next tech boom safely. Welcome to the AI revolution. You're about to step into one of the biggest wealth shifts in modern history, the rise of artificial intelligence. From ChatGPT to self-driving cars, from predictive medicine to algorithmic trading, AI isn't the future anymore. It's here. But here's the truth. For every investor who rides the wave, there are dozens who crash on the rocks of hype. This audiobook is your guide to riding the next tech boom safely. You'll learn how to spot real opportunities, manage risks, and understand the tech even if you're not a coder. Let's begin. Chapter 1. The AI Gold Rush. Every generation experiences its own version of a gold rush, a moment when new technology captures the world's imagination and creates massive economic opportunity. In the 1990s, it was the rise of the internet. People who recognized its potential early saw companies like Amazon and Google grow from tiny startups into global giants. In the 2000s, the smartphone revolution changed everything again, making mobile technology an everyday essential and creating a new wave of billion-dollar companies. Today, the new gold rush is artificial intelligence. Everywhere you look, AI is transforming industries, from healthcare to finance to entertainment and transportation. Businesses are racing to develop smarter algorithms, automated tools, and digital assistants that can learn and adapt like humans. The excitement is enormous, and investors around the world are searching for ways to profit from this technological boom. But here's the important truth. In every gold rush, not everyone strikes gold. The people who make the most money are often not the ones chasing the treasure directly. They're the ones selling the shovels. During the 1800s California gold rush, it wasn't just the miners who got rich. It was the merchants who sold the picks, shovels, and supplies. The same principle applies today. In the AI revolution, the shovel sellers are the companies providing the essential tools that make AI possible. Chip manufacturers like NVIDIA and AMD supply the powerful graphics processing units, GPUs, that train AI models. These chips are the backbone of AI computing, allowing machines to process massive amounts of data at lightning speed. Then you have the cloud giants, such as Amazon Web Services and Microsoft Azure, which provide the vast computing infrastructure that AI companies rely on to build and run their technologies. And beneath the spotlight, there are also smaller startups quietly developing specialized software, data tools, and AI frameworks that larger companies depend on. These businesses might not make headlines, but they often create the foundational technologies that others build upon. And that's where some of the best investment opportunities may lie. The lesson here is simple. When exploring the AI investing landscape, look beyond the hype. Everyone talks about flashy AI applications like chatbots and image generators, but the real value often hides in the layers beneath, in the companies enabling AI innovation to happen. If you can understand where the essential shovels are being sold in this modern gold rush, you'll have a clearer vision of where sustainable profits are likely to come from.
Chapter 2. Understanding the AI Ecosystem. To invest wisely in artificial intelligence, you first need to understand what AI really is and how the entire system fits together. AI isn't a single invention or company, it's an ecosystem. A collection of technologies and industries that work together to create intelligent systems. You can think of it like a pyramid with several layers, each one building on the foundation below it. At the very bottom of this pyramid lies data, the raw material that powers every AI system. Without massive amounts of data, AI cannot learn or make predictions. This data comes from everywhere: websites, social media, medical research, financial transactions, even sensors in our cars and homes. Companies that gather, clean, and structure this data form the bedrock of the AI world. Above data, the next layer is computing power, the hardware that processes all that information. This is where chip manufacturers like NVIDIA, AMD, and Intel come in. Their processors are the engines that train AI models, running billions of calculations per second. In recent years, the demand for AI chips has skyrocketed, making these companies critical players in the ecosystem. The third layer is infrastructure, provided by cloud computing companies such as Amazon Web Services, AWS, Microsoft Azure, and Google Cloud. These platforms rent out computing resources to businesses and startups, allowing them to build and deploy AI models without having to buy expensive hardware. This is similar to how people rent electricity from the grid instead of generating it themselves. The cloud makes AI development accessible to everyone. Next comes the AI platforms and research organizations like OpenAI, Anthropic, and Google DeepMind. These are the innovators pushing the boundaries of what AI can do. They build the advanced models like ChatGPT or Claude that can understand language, create art, or solve complex problems. Their breakthroughs form the foundation for countless new AI applications. Finally, at the top of the pyramid are the applications, the products and services that everyday people and businesses actually use. These range from AI-powered customer service bots and self-driving cars to medical diagnostic tools and investment assistance. These are the technologies that change how we live and work, and they're often what most people think of when they hear AI. As an investor, it's crucial to see how these layers connect. The applications may be exciting, but their success depends on the stability and strength of everything beneath them: the chips, the cloud infrastructure, the data, and the research. When one layer grows, it often boosts the others, creating a powerful network of opportunity. Understanding this ecosystem helps you identify where your investment fits best. Some investors prefer the stability of infrastructure companies that will always be needed, while others chase the higher risks and rewards of innovative startups. Whatever your strategy, recognizing the layers of AI gives you a clearer, smarter way to invest in the future, not just in the hype, but in the foundation that makes it all possible.
Chapter 3: The Psychology of Hype. Every great investing boom begins with excitement, a spark of discovery that captures the world's imagination. It starts with optimism, builds into enthusiasm, and often ends with emotion. This emotional journey is what we call the hype cycle, and it has shaped every major technological revolution in history. Think about the dot-com bubble of the late 1990s. The internet was transforming communication and commerce, and investors were desperate to get in early. Stocks for companies that barely existed were skyrocketing overnight. The same thing happened during the cryptocurrency boom, when people poured money into coins they barely understood, simply because everyone else was doing it. This powerful urge to follow the crowd has a name: FOMO, or the fear of missing out. It's one of the strongest emotions in investing. When you see others making money, your brain tells you that you're missing an opportunity, that you need to act fast before it's too late. But acting on emotion rather than strategy can lead to painful mistakes. Markets are driven by human behavior, and that means they rise and fall based on collective emotion. In the early stages of a boom, excitement fuels optimism, optimism fuels investment, and investment drives prices higher. It feels unstoppable until it isn't. When expectations rise too high, reality eventually catches up, and prices begin to fall. That's when panic sets in, and investors rush to sell, often at the worst possible time. The key to surviving and thriving through hype cycles is to recognize where you are in the emotional curve. When everyone around you is euphoric, bragging about easy money, and saying, "This time is different," that's often a warning sign. On the other hand, when the headlines turn negative and people start losing faith, it may be the moment when real opportunities begin to appear. Smart investors don't try to predict exact market tops or bottoms. They focus on timing emotion, not price. They understand that markets move in waves of optimism and fear, and they use that knowledge to their advantage. That might mean taking profits quietly when things look too good to be true,
or buying patiently when fear dominates the news. Remember, the psychology of hype is not about numbers or charts. It's about people. It's about understanding how belief, greed, and fear shape markets. When you can see beyond the emotion, you gain a powerful advantage: clarity. In the world of AI investing, hype is everywhere. Every week brings a new breakthrough or billion-dollar valuation. But if you can stay calm, objective, and disciplined while others are swept away by excitement, you'll not only protect your investments, but also position yourself to seize the real opportunities that appear when the hype fades and the true innovators remain standing.
Chapter 4. Building a Safe AI Portfolio. When it comes to investing in artificial intelligence, one of the biggest mistakes people make is thinking they have to gamble big to win big. The truth is, lasting wealth doesn't come from taking wild risks. It comes from building a solid, balanced foundation. And that's exactly what this chapter is about: creating a safe, smart, and diversified AI portfolio that helps you grow your money without losing sleep at night. Let's start with a simple truth. AI is not a single stock or company. It's an entire movement that touches nearly every corner of the global economy. That means your investment approach should reflect that diversity. Instead of putting all your money into one hot AI startup, you can build a mix of companies that represent different layers of the AI ecosystem. A smart AI portfolio can be thought of as having three parts: your core holdings, your growth bets, and your moonshots. Your core holdings are your foundation, large established companies that are leading the AI transformation. Think of businesses like Microsoft, Alphabet, Google, Amazon, or NVIDIA. These companies already have strong profits, diversified revenue streams, and deep investments in AI research and infrastructure. They're not just riding the AI wave, they're helping to create it. These stocks tend to be more stable, giving your portfolio long-term strength. Next are your growth bets. These are smaller, fast-moving companies that are developing innovative AI solutions. They might specialize in robotics, cybersecurity, data analytics, or cloud software. While these
Chapter 4. Building a Safe AI Portfolio. When it comes to investing in artificial intelligence, one of the biggest mistakes people make is thinking they have to gamble big to win big. The truth is, lasting wealth doesn't come from taking wild risks. It comes from building a solid, balanced foundation. And that's exactly what this chapter is about: creating a safe, smart, and diversified AI portfolio that helps you grow your money without losing sleep at night. Let's start with a simple truth. AI is not a single stock or company. It's an entire movement that touches nearly every corner of the global economy. That means your investment approach should reflect that diversity. Instead of putting all your money into one hot AI startup, you can build a mix of companies that represent different layers of the AI ecosystem. A smart AI portfolio can be thought of as having three parts: your core holdings, your growth bets, and your moonshots. Your core holdings are your foundation, large, established companies that are leading the AI transformation. Think of businesses like Microsoft, Alphabet, Google, Amazon, or NVIDIA. These companies already have strong profits, diversified revenue streams, and deep investments in AI research and infrastructure. They're not just riding the AI wave, they're helping to create it. These stocks tend to be more stable, giving your portfolio long-term strength. Next are your growth bets. These are smaller, fast-moving companies that are developing innovative AI solutions. They might specialize in robotics, cybersecurity, data analytics, or cloud software. While these companies carry a bit more risk, they also offer higher growth potential. Including a few of them in your portfolio gives you exposure to the exciting frontiers of AI, where tomorrow's leaders are being built today. Finally, we have the moonshots, the high-risk, high-reward investments. These might be startups or companies still proving their business models. They could be working on revolutionary AI technologies, from advanced neural networks to autonomous systems, or AI-powered healthcare. You should only allocate a small portion of your money here, but when chosen wisely, a single successful moonshot can transform your entire portfolio. Now, building your portfolio is just the beginning. Managing it is equally important. That means diversification, spreading your investments across different industries, company sizes, and even countries. It also means rebalancing from time to time, adjusting your holdings as the market evolves. If one stock doubles in value, you might take some profit and reinvest it into other areas. And most importantly, always maintain a safety cushion, some cash or low-risk assets that protect you during market downturns. AI stocks, like all tech investments, can be volatile. Having liquidity gives you flexibility. It lets you buy opportunities when prices dip instead of being forced to sell under pressure. Remember, the goal isn't to chase the next overnight success. It's to build sustainable wealth that grows with the AI revolution. A safe AI portfolio allows you to benefit from innovation while minimizing the risks that come with rapid change.
Chapter 5. The Tools of the Trade. Investing today isn't just about intuition or luck. It's about using the right tools. And thanks to artificial intelligence, investors now have more powerful, accessible, and intelligent tools than ever before. In this chapter, we'll explore how AI isn't only something you can invest in, it's also something you can invest with. Let's start with a simple observation. For most of history, investors relied on human judgment, experience, and emotion to make decisions. They read financial reports, studied charts, and watched the news. But in the digital era, there's simply too much information for any one person to process. That's where AI comes in. Artificial intelligence can analyze massive amounts of data in seconds. Patterns, trends, sentiment, even subtle shifts in market behavior that humans might miss. AI-powered tools can now read news headlines, track global economic signals, and evaluate millions of data points to predict potential outcomes. What used to take a team of analysts can now be done by one intelligent algorithm in real time. For individual investors, that means access to AI-driven platforms that were once only available to Wall Street professionals. Take robo-advisors, for example. Services like Betterment or Wealthfront use AI to automatically design and manage diversified portfolios based on your goals and risk tolerance. They rebalance your investments, minimize taxes, and adjust strategies automatically, often at a fraction of the cost of a human advisor. Then there are AI-powered research tools. Platforms like AlphaSense or FinChat allow investors to search through financial data, earnings reports, and market insights using natural language, just like asking a question to ChatGPT. You can ask, "Which companies have the fastest revenue growth in AI software?" and get answers instantly, backed by verified data. There's also sentiment analysis, a fascinating area where AI scans social media, news outlets, and online discussions to gauge how investors are feeling about a certain company or industry. If public sentiment suddenly shifts from positive to negative, AI can flag that change before the market reacts, giving you a valuable early warning. And don't overlook portfolio monitoring tools that use AI to track your holdings, forecast potential risks, and even suggest better allocations. They can alert you when your portfolio becomes too concentrated or when an opportunity appears that aligns with your strategy. But with all these powerful tools, there's one thing you must remember. Technology can guide you. It shouldn't replace you. AI tools are meant to enhance human decision-making, not take over completely. They help you make smarter, data-driven choices, but your judgment, discipline, and values remain the most important parts of your investing journey. So, as you continue your path in AI investing, take advantage of these modern tools. Use them to save time, reduce mistakes, and stay informed.
But don't let the technology think for you. Let it think with you. Because when human wisdom and artificial intelligence work together, that's where the real power of modern investing begins.
Chapter 6. Spotting Real Innovation. In every technological revolution, there's excitement, and then there's exaggeration. Artificial intelligence is no different. Everywhere you look, companies are rebranding themselves as AI-powered or AI-driven, but not all of them truly are. In fact, many use the term AI as a marketing buzzword to attract investors and media attention. So how can you tell the difference between genuine innovation and clever storytelling? How can you separate the real builders from the hype chasers? That's what this chapter is all about. Let's start with a simple truth. Real innovation solves real problems. True AI companies aren't just adding buzzwords to sound modern. They're developing technologies that make existing systems faster, smarter, and more efficient. For example, a company using AI to detect diseases in medical images, predict equipment failures in factories, or prevent fraud in financial transactions. That's real value. It improves lives, saves money, and makes industries work better. Fake innovation, on the other hand, is often shallow. You'll see companies that claim to use AI, but when you look closely, their technology doesn't actually learn or adapt. It might just be basic automation, a set of simple rules pretending to be intelligence. These are the types of companies that often burn through investor money and disappear when the hype fades. So how do you spot authenticity? Start by looking beneath the surface. Here are 3 key indicators to focus on. First, technology depth. Does the company actually develop AI models, or are they simply using off-the-shelf tools? True innovators invest in research and development, hire data scientists and machine learning engineers, and often publish or patent their findings. You can check this by reading their press releases, job postings, or academic papers. Second, partnerships and customers. Real AI companies attract meaningful collaborations with universities, tech giants, or industry leaders. If a small AI startup is partnering with a major healthcare network, an automaker, or a government agency, that's a strong sign that its technology is trusted and valuable. And third, results. Innovation should create measurable outcomes: faster processing, better accuracy, or reduced costs. If a company can demonstrate how their AI improves performance or saves resources, that's proof of real-world impact. Also, pay attention to the leadership team. Companies led by people with backgrounds in computer science, data analytics, or machine learning are often more credible than those run solely by marketing executives. Vision matters, but execution matters more. The good news is that the market eventually reveals the truth. When hype fades, only the companies with genuine innovation survive and grow stronger. We saw this with the internet, with smartphones, and with blockchain, and AI will be no exception. As an investor, your advantage comes from being able to recognize authenticity before everyone else does. Don't be distracted by loud headlines or viral trends. Instead, look for the quiet, focused companies building the essential technologies that others depend on. Those are the innovators who will still be standing years from now, the ones turning today's experiments into tomorrow's everyday tools. So, when you invest in AI, look for substance over style. The best opportunities often don't shout, they whisper. But for those who know how to listen, those whispers can be the sound of the future.
Chapter 7. Risk Management in the Age of AI. Every investment carries risk, and in the world of artificial intelligence, those risks can be even sharper. AI is powerful, but it's also unpredictable. Markets move fast, technology changes overnight, and hype can inflate prices far beyond reality. That's why learning to manage risk isn't just a good idea, it's absolutely essential. Think of investing like sailing. You can't control the wind, but you can control your sails. You can prepare for storms, balance your boat, and make sure you don't tip over when the waves get rough. Risk management works the same way. It doesn't stop volatility, but it helps you stay afloat when the market turns against you. So, how do you manage risk in the age of AI? Let's break it down into a few key strategies. First, understand what you're investing in. Many people buy into AI companies because they hear exciting stories, but they don't actually know what the business does or how it makes money. Before investing, always ask yourself, is this company truly using AI to create value, or is it just riding the trend? When you understand a company's technology, customers, and competition, you can make clearer, more confident decisions. Second, diversify. Don't put all your money into one company or even one industry. Spread your investments across multiple sectors: hardware, cloud computing, software, and AI applications. This way, if one area slows down, another might be rising. Diversification helps smooth out the ups and downs, protecting you from total loss if something unexpected happens. Third, set boundaries for yourself, what investors call stop-loss limits. Decide ahead of time how much you're willing to lose on a particular stock before you sell. It's easy to get emotional when prices fall, hoping things will bounce back, but discipline is what separates successful investors from the rest. When you plan your exits in advance, you take emotion out of the equation. Fourth, keep a portion of your portfolio in cash or safe assets like bonds or stable index funds. This gives you flexibility. If the market crashes or a new opportunity appears, you'll have the liquidity to act instead of being trapped with all your money in volatile positions. Fifth, stay informed but not overwhelmed. AI evolves fast and new developments appear daily. Follow reliable news sources, company reports, and expert analysis, but avoid getting caught up in constant noise. Not every headline deserves your reaction. The goal is to stay educated, not anxious. And finally, remember this golden rule. No investment is worth your peace of mind. If an AI stock is keeping you awake at night, you're probably overexposed. Investing should build your future, not drain your energy. Risk management isn't about avoiding loss completely. That's impossible. It's about surviving downturns so you're still standing when the next opportunity arrives. The investors who last the longest aren't the ones who chase every boom. They're the ones who can endure every bust. AI is changing the world, and with change comes uncertainty. But by managing your risks through knowledge, diversification, and emotional discipline, you can turn that uncertainty into opportunity. Because in the end, the goal isn't just to profit from the AI revolution, it's to do it safely, strategically, and with the confidence that no matter how the market moves, you're always in control of your own future.
Chapter 8: The Future of AI and You. Imagine the world 10 years from now. A world where artificial intelligence isn't just a tool for businesses or researchers, it's woven into the fabric of everyday life. Personalized AI tutors could guide every child through education, predicting the lessons they need most. AI-driven healthcare systems might detect diseases before symptoms even appear, saving countless lives. Cities could run more efficiently, with traffic, energy, and public services optimized by intelligent algorithms. The future of AI is breathtaking, but it's also complex. Technology will advance faster than most people expect, and markets will shift in response.
This creates enormous opportunities for investors who can anticipate the trends and understand which companies are best positioned to benefit. The challenge is separating the true innovations from the fleeting hype. In the coming years, AI will impact every sector: finance, logistics, manufacturing, entertainment, and even law and governance. No industry will remain untouched. Companies that adapt and leverage AI effectively will dominate their fields, while those that ignore or misuse it risk falling behind. As an investor, recognizing these shifts early can make the difference between substantial gains and missed opportunities. But it's not just about the companies, it's about you, the investor. The AI revolution rewards those who are prepared, patient, and informed. By understanding the technology, following the trends, and investing thoughtfully, you can position yourself to ride this wave of innovation safely. Even small, consistent investments in AI-driven companies or funds can grow significantly as the technology becomes more integrated into everyday life. It's also worth remembering that the AI revolution is a marathon, not a sprint. Some technologies may take years to mature, and some companies may rise and fall unexpectedly. That's why having a balanced portfolio, disciplined risk management, and a long-term perspective is crucial. You're not just investing in a single product or innovation, you're investing in a transformation that will shape economies, industries, and societies for decades. Finally, consider your role as more than an investor. Understanding AI and its potential helps you make smarter decisions, not only financially, but also in your personal and professional life. AI will change how we work, learn, communicate, and create. Being informed gives you the advantage to adapt, thrive, and seize opportunities as they appear. The future of AI is vast, exciting, and full of potential, but it rewards foresight, patience, and strategy. By preparing today, you're not just keeping up with technology, you're positioning yourself to benefit from one of the most transformative forces in human history. And that's a perspective worth holding on to as you step into the next chapter of your investing journey.
Chapter 9: The Investor's Mindset. The most successful investors share a common trait. They cultivate the right mindset. They don't chase every trend, and they don't panic when the market wobbles. Instead, they approach investing with curiosity, patience, and discipline, qualities that are especially important in a fast-moving field like artificial intelligence. The first element of the investor's mindset is patience. Markets move in waves, and AI is no exception. Breakthroughs, valuations, and adoption cycles take time. Rushing in or expecting overnight results is a recipe for disappointment. Patient investors understand that compounding returns and long-term trends matter far more than short-term excitement. Next is curiosity. The AI landscape is constantly evolving, and staying informed is essential. A curious investor asks questions. How does this technology work? Which companies are solving real problems? What trends could shape the next 5 to 10 years? Curiosity allows you to see opportunities that others miss and avoid traps hidden in hype. Discipline is another cornerstone. Discipline means having a plan for diversification, risk management, and portfolio adjustments, and sticking to it even when emotions tempt you to act impulsively. It means taking profits when appropriate, cutting losses when necessary, and resisting the urge to follow the crowd blindly. Finally, embrace a mindset of continuous learning. AI is one of the fastest-moving areas of innovation in history. The strategies that work today may need adjustment tomorrow. Those who remain flexible, informed, and open to new ideas will be the investors who thrive in this rapidly changing environment. The investor's mindset isn't about predicting the future perfectly. It's about positioning yourself to benefit when opportunity arises, making informed decisions, and staying steady when uncertainty hits. When you combine patience, curiosity, discipline, and a willingness to learn, you give yourself the best chance of success, not only in AI investing, but in all areas of life.
At last, I would like to say that you've now explored the landscape of AI investing, understood the risks, and discovered the tools that can help you make smarter, safer decisions. You've learned not just where the opportunities lie, but how to navigate them with patience, strategy, and insight. Now, you're ready to ride the next tech boom safely and confidently. Remember, investing is a journey, not a sprint. Stay disciplined, think long-term, and keep learning as the world of AI continues to evolve. Thank you for listening to AI Investing, How to Ride the Next Tech Boom Safely. Take these lessons, apply them thoughtfully, and let curiosity and careful planning guide your path. Until next time, invest wisely, stay informed, and never stop asking questions. The future is bright for those who prepare today.